We will start with our first panel for the day, which will explore the status of Cyprus 2 years after it has sustained a major crisis. I will let Avi Mizrahi, who is an editor with us, to introduce the panel, and then he will let the speakers, the distinguished cadre of speakers, present themselves. I hope you enjoy, and we will leave 10 minutes at the end for audience Q&A, but if you have a really, really pressing question during, don't be ashamed to lift your hand and we will hand you a microphone. Enjoy.
Thank you, Erez. Hello, everybody. Here we are in Cyprus again, the international capital of Forex and binary options. And basically today we're going to try and figure out on this panel for how long can Cyprus remain the central hub for the trading industry. So we'll start by everyone saying their name and what company they represent. And let's start, please, Vasily.
Thank you, Avi. Hi, everyone. My name is Vasily Sukhotin. I am with FX Pro. I've been with FX Pro since the beginning. I'm actually stepping in for our CEO, Charalambos Psimolophitis, who unfortunately is just landing today in Cyprus. So his apologies from my behalf. And also to add that I've been living in Cyprus since 1994, so I basically saw it all. Thank you.
Good morning, everyone. My name is Stephen Leahy. I've been around the industry for a while, had a number of roles with a number of different firms. And I have recently joined a company called FX Primus. FX Primus also recently gained our CySec licensing here. So as far as the panel goes, I'll have a fairly unique view as that we are kind of the rookies to CySec here on the panel.
I'm Sarah Henry. I'm from Conversion Pros. Head of sales. As most of you already know, Conversion Pros is the company that brings IFX Expo here to Cyprus. And in addition to that, we do operate as a marketing agency, so I'll be offering a marketing perspective as well.
Morning conference. Chris Bates, I'm founder of Abide Financial, and for the next 2 days, apparently, Chief Ice Cream Officer as well, so please go and get your ice creams out there. Abide was formed 4 years ago. We're an approved reporting mechanism in the UK. We've got 24% of the market out there. We have 1.2 billion retail derivative UTIs managed under EMIR right now. As Stephen said, I wouldn't purport to be necessarily a long-term expert on the history of Cyprus, but what we did do is analyse Cyprus a while ago. We worked out what was good about it, and we prioritise this market over others for the next push from Abide out of the UK.
Hello, my name is Ekaterina Gorlova. I started in the Forex industry as a head of FOBA advertising company. Our company works in the Russian market, providing experience promotion for both international and Russian companies. And since 2014, I'm a member of governing Serfin board. Serfin is the organization which creates and provides effective mechanisms in the Forex Russian market, including the law.
Thank you. As you can see, we have an international panel bringing different facets of and different point of views about Cyprus. So first question will be, as I said, we're 2 years after the crisis here in Cyprus. Please tell me, how do you see, let's start with you, Vasily, how do you see the island recovering and the perception of people of Cyprus right now?
Thank you. Well, the economy grew 0.5% last quarter. Obviously, that's not enough to see the growth of the economy. We need at least another 2 quarters in positive territory. Cyprus being a relatively small economy with very dynamic industries such as the service and tourism, I think soon enough we'll be able to see Cyprus get out of the woods.
I can probably add to that. I think it's a tale of 2 halves from sort of the work we did before we sort of entered the Cyprus market. I think there was personal tragedies around, we have friends that lost all their savings, so they weren't necessarily players in our market. And that was a real downside of what happened. But I think what we've seen over the last 2 or 3 years is not only the measures that were implemented here having an effect, but a turnaround of the economy. And I think certainly from an international perspective, the standing of Cyprus as a serious place to do business with a rigorous approach to managing their environment has only increased their standing on the international markets.
If I can add to that as well, Chris mentioned something about the international standards, but specific to the industry that we're all here for, right? Margin trading products or FX, CFD, binary options. As far as the crisis goes, well, certainly there was some pain from the bail-in from a number of years ago. You know, my company is an example of the fact that whether there was a crisis in our industry per se, I can't necessarily say, right? There are more and more firms who are continuing to get regulated here by CySEC. CySEC continues to be a hub for firms, for new innovative ideas, for different companies, and so, you know, whether there was a crisis per se in our industry, I can't say. Obviously, an actual crisis, the banking bail-in was terrible, but our industry, you know, I don't know that there was necessarily a crisis, and had there been formally a crisis, we've certainly done well as an industry to recover from that.
I think also when you take the perspective, looking at it as an organizer of the expo, when you see the increase over the years as well, from having 1,000 delegates at the show and then today welcoming over 2,000 hopefully, and over 80 exhibitors, this definitely indicates that we're still, you know, at that level of being in the right place anyways, located here in Cyprus. And I think also when you look at, from international perspective inwards, like it was mentioned earlier, Cyprus is synonymous with the finance industry. So we've maintained our standing, and I think CySEC as a regulatory board has done very well with regards to making sure that they're doing their due diligence when it comes to corporate governance of brokers that are regulated here.
Judging by the fact that the Financial Authority of Cyprus lifted the last restriction on movement of the capitals abroad, introduced after the crisis, the economy of Cyprus is restored. Certain representatives of the financial authorities are lifting of restrictions, even harder to declare return of economy to normal conditions, considerable improvement of business, and even restoration of trust to a banking system. However, we think that it's too hard to speak about a complete recovery of trust of banking system of Cyprus. And it's need more time to restore completely.
I understand. So speaking about CySEC and about regulation here in Cyprus, we've seen some brokers that were regulated by CySEC also seeking regulation in the UK by the FCA. Are you hearing from your partners or your legal departments that there's any possibility that European jurisdiction will no longer accept passporting based on a CySEC license?
I haven't heard anything about that. In truth, it seems to me that Cyprus, as a kind of pan-European regulatory space, and CySEC as a pan-European regulator, we see more and more of the regulators, and again, pan-European across Europe, they're building reporting mechanisms, they're building reporting systems that actually cross borders. And so I think it would be unlikely that the regulators would then seek to quickly unbuild what they've spent years building, which they're still in process of building, as Chris and I were speaking about earlier.
Yeah, if I can sort of, I will add to that. I think there's two aspects to this. One is harmonisation of the regulators. I think that there's a lot of work to be done. We talk about EMIR, so I come at this from the regulatory reporting side, so I'm pretty specific. But if we look at EMIR, right now, a regulator in the north can't necessarily have the same picture of the same global bank as a regulator in the south within the EU. There's different implementation methodologies, there's different languages used in terms of technology standards, and we're finding as a kind of a one-stop shop between regulators that we're having to do a lot of translation. And what this is doing is just creating more and more burden for the firms right now. So we're actually, we want to see more harmonisation from the regulators. We'll probably see that coming up with MiFID II in the future. ESMA need to take probably a more stronger role in doing this, and they have done so far. We talk about passporting for our services as well as an approved reporting mechanism. We don't think it's going to happen under MiFID II. So even though we have to apply for our license again in 2 years, we don't see that we're going to then be able to operate with BaFin in Germany, with CySec in Cyprus, without some sort of extra work, maybe even extra fees. So it's a challenge for Abide as well. I think what we're seeing is our clients actually moving into dual licenses. We've got multiple large, well-known Cypriot sort of retail derivative clients doing that right now. And I think what's happening is that the market's looking at the opportunity, specifically in the UK. There is a higher regulatory burden in some cases from the FCA over there, and they're weighing up vendor costs, regulatory internal costs, and then the market opportunity. And what we're seeing is that in London, it's a positive experience. What Abide and sort of the one-stop shops are trying to do then is adapt their fees to support the opportunity for the end clients and the market. It goes wrong as well. So we were trying to support clients in Canada, and we had quite a fractious regulator out there. We had a low market opportunity, and we had no ability to have a one-stop shop out there. So we were relying on other vendors, and when you added up all the costs, it was too much for the opportunity. And what we did actually see then in Canada was firms leaving that market. So even regulatory reporting, let alone the whole license issue, can have serious implications on competition in retail derivatives in certain markets.
And I think with CySec, we have, I think the number is around 190 firms actually regulated under CySec at the moment. And like was just mentioned, a lot of firms do have dual licensing, and there's no reason why that wouldn't be an option for many of these firms. But when we're looking at Europe, and especially from a marketing perspective, going into specific countries, because you're dealing with language, and certain countries are very close-knit. Germany is very difficult to penetrate, Russia as well. And I think just earlier, my fellow panelist, she had mentioned that if you're looking to go into Russia, there's her board that you definitely want to be involved in and have that kind of exposure with as well. So whether or not passporting would be stopped, I'd highly doubt it, because it would just have a negative effect across all European regulated firms.
I just want to step in and say that, okay, CySec has its advantages and disadvantages. The advantage is that CySec has a very good knowledge of the industry. I would say unlike most of the regulators, because of the industry, as you said, 119 licenses have been of CIFs are given out. The disadvantage is, from my perspective, is that CySec lacks the manpower to enable and to ensure that all the regulations are followed. Now, the difference between Cyprus and the UK firms, once again, according to myself, is that there is a culture in the UK of abiding to the regulation. So, unlike Cyprus, you have a small number of firms who think that, have a looser approach on the regulation and not necessarily follow each and every step and each and every rule. And I think that is down to the industry to change its culture of abiding to the regulations. Otherwise, in the worst case scenario, the European countries of MiFID might revoke accepting the CySec regulation.
If we were to add better regulatory reporting here in CySec, do you feel that would be that would help be part of a solution to the problem you mentioned?
It could be, but once again, I don't think CySec should be the police of the industry, rather than the approach of the CIFs in abiding to the rules.
I think there are no preconditions for European countries to stop accepting CySec. There must be extremely reasons for that. They may be geopolitical or economic, or it may be professional. It may has professional character. For example, it can be if it is follow of resonant bankruptcies of the Cypriot licensees, which is followed by a large number of injured investors in the leading European countries, for example.
Well, I think, for example, when we look at the British press, whenever they're talking about a company that Forex related or binary option related company that is operating in the UK market and not regulated in the UK, they always emphasize that. That's something they always even criticize the FCA for allowing. You know, you don't see it as a.
It's back to the harmonisation question. So you know, perhaps SciSec are less aggressive with the supervision around MiFID. They've actually included binary options under EMIR here, where the FCA don't. I think there's 2 or 3 aspects to regulation that either kind of makes markets adopted or not. For a long time in the FCA, when the UK, when MiFID came out, it was considered just to be, you know, not an important thing to do. The time when the UK actually, the market actually stood up and took it quite seriously is when the fines started arriving. And we're not at that stage with EMIR yet, but you know, there's talk. The FCA at the moment are looking at level 1 validations with the tier 1 brokers actually in the UK. And I think what you have to have is obviously the rules to say what's in and out. So what is in and what is out of the supervision, and then what happens if you don't do it. And if nothing happens if you don't do it, there's not a lot of incentive to do it, because it is a tax. And we kind of, you know, as a vendor around this, we get it's a tax on trading. And what we try and do is say, well, you know, let's try and give you as much time back. If you give us any money, we give you that time back. And the idea is to get it right first time, get it away from you, and allow the firms to get on with trading and not have to worry about this. I think the FCA are very aggressive. I think the way that they're now charging on a per issue basis, so the 13, 14 million pound fines because the firm got the same error wrong multi-million times is, you know, highly aggressive and, you know, could be seen to be revenue generating in its approach. But I think the fines that necessarily you're seeing from SciSec are quite small, and I think that leads to maybe less of a, you know, an interest in getting it absolutely right by the local market, and I kind of understand that.
If I can add something to what Chris said earlier, the example of the Canadian firms that just abandoned the business because the regulator was too hard to please. You know, while regulators are not in charge of GDP growth, especially in a place like Cyprus, a fairly small country with a small GDP, where the financial services sector here in this margin trading industry that we're all in is a significant aspect of the economy. You know, again, while the regulator's primary goal is not to promote the economy, there's got to be some note taken of the fact that the stricter the regulators are, the less business that happens in a clearly flourishing industry, you know, the worse off it is for the country, for jobs and for GDP, right? So I would like to think that there is some small aspect that when the regulators are interacting with the lawmakers on any high-level issues, that is at least a consideration. I don't know that for a fact. I'd like to think so, though.
I think it's kind of not binary, so it's not black and white. I think if we link it back to the first question about the return to growth and how Cyprus is commanding respect internationally now for what it's done from an austerity point of view, there's probably a middle ground where there's good regulation supervised appropriately that supports confidence in the markets. I think that, you know, going too far one way or too far the other probably does, you know, detract from the opportunities that present themselves.
But there is room for more fines, you said. That's
Perhaps.
It would make people pay more attention, to Vasily's point.
okay. So let's look at the larger economy. We're seeing now, you know, only bad news coming out of Greece recently, and I wanted to know your opinion. In case of a Greek exit from the Eurozone, how will that affect the market? Is that something that brokers, companies need to be ready for?
Well, living here since 1994, I can tell you for sure that the two economies and the two countries, culturally, economically, they were very close. Up until when the Greek government decided to make a haircut and the Cypriot banks decided to basically bail in. Since then, the government and the European Union, they have ring-fenced the Cypriot economy from Greece. In case of a Grexit, which I don't know is likely or unlikely, I'm not the expert here, so I'll leave it to the experts. In case of a Grexit, yes, there will be some impact on the economy. There will be some impact on the industry in terms of the investors losing faith in Cyprus. But in my opinion, they will be very short-lived. As I said earlier, the economy is ring-fenced from Greece.
I think also the fact that it's an unprecedented event. It's like Vasily mentioned, we can't know whether it's going to go here or there. But the fact that it would happen, it wouldn't just affect Cyprus. Greece is a member of the European Union, and there are other countries that would also likely be affected by it. So, from an investor looking at Cyprus as, you know, or Cypriot brokers as options for investment, obviously it's something that you'd want to keep in mind, and that there is inherent risk. But at the same time, Cyprus, when you look at it historically, it does have it usually overcomes most crises. I mean, it overcame an invasion. There was a stock exchange crisis that happened, which actually forced the establishment of CISEC. The crisis itself, which now we're looking at a rebound. So if that were to happen, like Vasily mentioned, it definitely would be something short-lived, because it is in the nature of the country to be resilient when it comes to these things.
I think perhaps Cyprus has got a position as well where its position within the EU, I do think there would be downward pressure, you know, outflows, investment slowing down, but its position within the EU with the access to the markets that I'm sure we'll talk about at some point, it could be an opportunity in the medium term as well, where it would be a place for Greek investment to be a portal into the EU markets again.
For me, I would say, you know, the actual market activity, I'll leave to the speculation of the traders and analysts out there. As far as investors go, for FX Primus, you know, our investors, our traders have confidence in FX Primus as being a reliable, stable partner to them in what they're trying to do, right? We, in turn, have great faith in the regulators that and the regulations that we abide by, right? We trust that this has been given some thought, and that, you know, when we play by the rules there, that we as an entity are safeguarded between what the regulators have set out as standards and what we have as our own kind of internal compliance and financial metrics.
Just to add the point that, from what I know, the European Central Bank, in case of a Grexit, is prepared to help the peripheral economies. So there is some hope there.
I think the exit of Greece from the Eurozone will put negative pressure anyway upon business climate and confidence. And Cyprus is not an exception here, but I'm sure that all necessary preventive measures will be undertaken.
Okay, and let's talk specifically about the industry now. We've seen companies going to London to seek an IPO, basically on the London Stock Exchange Alternative Investment Markets, AIM. We've seen, for example, Tech Financials, the binary option technology company, and of course, Plus 500, that's now in the headlines. As companies go to London, right, they do obviously look at the FCA. So is there a danger that London, as a former, colonial power, and still the one of the leading capitals of the financial industry globally, that it will take over the place of Cyprus?
I will answer to that question. London is the place to be, provided that if a company wants to go public. FX Pro, for example, we have our headquarters in London, so the big firms already are there. For the smaller firms, I think they cannot bear the costs and the regulatory implications to set themselves up in London.
From my side, for FX Primus, under the banner of FX Primus, we also have a sister company called Capmar, which is a FCA-regulated entity, kind of prime of prime. And so I agree with Vasily that I think the larger players are probably already in London, as well as potentially being in other regulatory regimes such as Cyprus here. Right? As for the appeal of necessarily being in London with the registration and regulation there to raise public capital in an IPO, I don't think that's necessary. Raising IPOs is something that my firm has, many of you may know, we've been kind of through a process recently. The idea for any high-growth firm in this industry, look, there's demand out there from public market investors for growing firms that are in this margin trading industry, right? And so it'd be foolish for any firm who's in this space not to at least consider that as an option for raising capital. But I don't know that, and I don't think that one necessarily needs to be in London per se. It probably helps a little bit. I think more it helps from the actual operations of an entity, because as Vasily mentioned, that truly is still the global capital for this industry that we're in.
Chris, you have any?
Well, I suppose the delinking investment requirements from actually the business that's transacted. You know, London looks west to the US. It's a hub there, and I think Cyprus, as you know, I don't need to say this, but you know, the access to the markets east that Cyprus can generate. I don't think it has to be an either/or. I think that it's two different sort of scenarios. One about raising money, one about transacting business. And I don't see that, you know, London has to eradicate Cyprus or Cyprus has to beat London. I think they both will coexist, supporting the markets in which they sort of prime.
FCA is very authoritative and allows conduct activity practically worldwide. There is nothing surprising that this jurisdiction attracts big players. But it should be noted that the presence at one adjustable jurisdiction doesn't exclude presence at another.
I'll add, going back to that, something that Vasily mentioned. The retail marketplace is certainly a whole different animal than the institutional or mid-size industry, or marketplace, I guess I should say. And so, you know, in a way, being in London and having operations there regulated under FCA rules and regulations, it means that you're going after a different set of clients than the firms that are necessarily regulated here in Cyprus or in other places. Neither is good nor bad, they're just different.
So for institutional, it's more of consideration going for London, for institutional business.
Most certainly.
Okay, and what about competing jurisdictions? We've seen, for example, in the past, Malta been talked about as a possible new Cyprus for the industry, as well as other offshore locations, as Man, for example, out of Man. Does anyone have any thoughts about like Malta or anywhere else overtaking Cyprus?
I think when you look at Malta, I mean, previously we were talking about Cyprus and how it's, you know, one of the main countries that you would think of when you're looking for regulation. Malta was, you know, established more on the gaming side, so definitely I think binaries, they would be looking at Malta, and they probably did get a bit of a lead, let's say, when the crisis happened here. But again, when you're establishing yourself in Malta, you run into the issues also of human resources. Many of the firms that start up there, they end up actually contacting Cypriot HR offices looking for people to relocate over there. There's an extra cost to setting up in Malta, definitely, compared to Cyprus, which is already an established place with human resources, away from the fact that there's multiple taxation reasons that corporations actually set up here.
We actually polled a few of our clients for this panel to see what their decision-making process was for Cyprus, and they looked at Switzerland, Malta, Jersey, Guernsey. I think the feedback we got was, you know, Switzerland was different markets, different players, not necessarily totally appropriate for the retail derivatives markets that we see here. I think I'll see to what Sarah just said about Malta. That was very incisive. What we were hearing, the other potential destinations, was that there was a feeling of safety in numbers around Cyprus, and it was going to be a bold move to break away from the sort of the pack mentality here within the retail derivatives market and move out. So I think what Cyprus has is economies of scale right now. They've got a very concentrated retail derivatives market here, and I think there's going to have to be some pretty significant changes for either regulatory or economic to push the significant firms out of this market into competing ones.
I think that unless the Cypriot FX industry doesn't destroy itself by itself, there will be another hub show up very, very soon. And I think that another country and other regulators will seize the moment.
Though I would say that you know, Cyprus is clearly, it's not a threatened community. I don't feel. Cyprus has a very welcoming environment. So I guess springboard for growth here. There are a lot of people at this point now who are talented, who've been in the industry. There's a lot of new ideas, concepts, whether they be marketing ideas, company ideas. If it weren't for Cyprus in the last number of years here, this industry would be very different than what it is presently. And so I don't think that Cyprus is threatened at all as a global regulatory regime. I think it's got a specific place in the world, right? Again, as I said earlier, different than the UK, but not different good or different bad, just different. If I were to really truly speculate, I would say that potentially one of the Emirates in Dubai could try to threaten Cyprus, but that's been talked about now for 10 years, and DIFC is up, but we don't see that really competing for business here, right? So I really don't think Cyprus is threatened. I think thriving, and I don't foresee that someone's going to take the place of Cyprus anytime soon, unless, as Vasily mentioned, our industry decides to blow itself up somehow.
I'm not saying that Cyprus is threatened. I fully agree with you. I'm just saying that if the mentality, if the culture of abiding to the regulations doesn't change, then there is a chance.
Thank you.
I think also when you look, when a broker looks to set up in Cyprus, obviously there's multiple companies here that are exhibiting that you go to for help with compliance and regulation, and most of these firms are Cypriot owned, and I don't think that they would be promoting other jurisdictions as well, because they don't just promote Cyprus licensing, they also deal with Malta, they deal with the UK, they deal with Marshall Islands. I mean, if it was such an issue for them, or that they did feel that there was a reason that brokers would eventually just stop coming to Cyprus for regulation, I don't think that they would be promoting those countries either so heavily.
I think there's going to be an uptick in regulation. We're going to see that. It's just the path of the course. It's what's happening across the markets. And I think the analysis that we are investing in things like this event, Cyprus itself, working with Cypriot companies now, and we've had no sort of tangible questions asked by our own boards or anything about our strategy re Cyprus that says that this is a waning market. But I do think regulation is going to increase, and I think when that happens, what it does is it creates opportunities for vendors to enter the market. That's what Abide did in London 4 years ago. There was not enough supervision, so the FCA thought firms were struggling to reach the bar that the FCA were requiring. So what you had is firms like Abide being launched to actually try and economically deal with the facts and allow the firms to get on with trading. And I think that's probably what we expect to happen within the Cypriot market.
In perspective, there are no real threats to developing of Cyprus as popular European regulator. To be fair, it should be noted that many jurisdictions which are considered offshore toughen the financial legislation and requirements to finance companies dreaming to repeat a Cyprus way, which rather short period managed to be transformed from the offshore to respectable European regulator.
There's also a bit of a network effect, right? I have a technology background, and so here in Cyprus, the more entities that are built up around the industry, the more firms there are, the more individuals who have a vested interest in the industry succeeding here, the more likely it is to continue to succeed here, right?
So since we already touched that, so let's expand. What qualities do you see in Cyprus that made it such a hub? What made you choose work? What made you choose working here?
Well, as I mentioned earlier, I'm here since the beginning, so I've seen Cyprus before the FX industry came to Cyprus, and we established ourselves in 2006, 2007. We got the license. So along with a couple of brokers, we were the early, the dinosaurs of the Cypriot FX industry, which attracted a lot of other companies. And as Sarah mentioned, which created a lot of workforce, qualified workforce for this industry. It's rare to find it in any other country. Of course, you can find it in London, but the cost is just very different. This is what I think attracted. Also, the regulation. CySec is very knowledgeable regulator, and he knows what he's doing. Unfortunately, it doesn't have the manpower to be ensuring, to be the police body of the industry, but it doesn't have to. So I think, in my perspective, this is why Cyprus is very attractive to a lot of companies.
So you hit the nail on the head, right? My firm is recently regulated here, and the regulatory regime here is thorough, though maybe understaffed. Valid point. It's globally recognized as a place to do business. The pool of talent here, of which I see a number of the talented people from my team out there in the audience, it's remarkable. The ability to spin up new ideas, new products. It has a very different feel than London, which, no offense to my UK brethren, a little more stodgy, a little less creative, quite frankly. Here there's much more vibrant energy, again, about new ideas, new concepts, new ways to do this business, right? And so very appealing on many different levels.
So I'll answer that in two parts. The first one, read Cyprus. I think there's probably three elements to this part of my response, so it's getting quite complicated now. So there's a unique positioning for Cyprus in terms of the hub. I think we all understand that. It's harmonised from a tax and legal point of view into Europe. It's got the access to the RIC countries, so Russia, India, China, the Emirates. I think from a tax point of view, tax haven, low corporation tax, it's got the foundations for attracting new businesses. And I think from a personal or a team point of view, from Abide, we found that it's still actually very much relationship driven, and that's where I do actually agree. From a London perspective, you can get things done quite quickly here based on relationships that you make, which is why we feel that these forums are so important. We've been able to make some good inroads in terms of our market with Cyprus by meeting the right people and doing the right thing. So it leads us to want to continue to put our time and effort into trying to serve the Cyprus market as well. I think London, I probably would challenge that it's stodgy. I think what it is, it's got inertia because it's big. But I think what happens is when you've got stodginess, it opens up opportunities for new firms. And I think when we launched, the market said to us, the tier ones, I think even the regulator may have done when we were writing 160,000 euro checks for our application fee, was, why are you doing this? It's saturated the market. And I think that when you do have inertia, but when you've got sort of stodgy markets, it opens up opportunities for new entrants. And we're seeing that all over with other firms, that are in our space as well. And I think London is stodgy, but attracting new vendors, new products, new services quite quickly. I think Cyprus is more relationship driven than London, which is it's really good for Abide because we want to grow. We're growing quickly, and being able to talk with you about sort of the challenges you've got here enables us to do that.
I think also when you look at the geolocation of Cyprus, actually, away from the fact that you can deal with a broad range of clients, the fact that when you have a brokerage set up here and most likely your platform provider is also located here, your support is here, if you're working with external marketing agencies, they're all here. It's very, very quick turnaround with all of the needs of a broker when it comes to actually day-to-day business and running operations as well.
I think first of all, the crucial role is played by the circumstances. Cyprus is the member of European Union. Respectively, CISEC has the same powers as well as European financial supervising departments. Besides the set of requirements of potential licensees, it's possible to characterize as rather balanced against some other regulation. Thus, today, the conditional relation of quality and of the license to the expense and expense connected with its receiving and service very attractive.
So, I have a follow-up. Stephen, maybe you would know. We're seeing now the main growth markets are in Asia. Everybody's targeting the Asian markets. And as far as I know, in China, for example, they consider Australia, Singapore to be the well-established markets. Would a trader in China know that Cyprus is a place that he can trust as a regulator?
I think at this point, yes. I think valid concern maybe 2 years ago or so. But I do think that even deep into some of the kind of smaller Chinese cities, the name Cyprus still conjures up regulation, a thorough regulatory regime, but more importantly, a financial center. Right? I'd be willing to bet, though it's speculative by me, that if you were to poll prospective Chinese investors, they're all going to note that they know what where Cyprus is on the map. They know what CISEC stands for. I think even more so than, granted, as you mentioned, Australia, Singapore are closer international hubs for them. I think that within, specifically in this margin trading products industry, I'd be willing to bet that CISEC is a name that's recognized from prospective clients and clients over there in mainland China and in Southeast Asia as well.
Sarah, you mentioned seeing more in binary options, and how CISEC is one of the first regulators to start regulating binary options. Is that a move that we're seeing in the local market from traditional forex margin trading to binary options?
I think it depends on the company, obviously. I mean, they're two totally different products. FX is definitely, let's say, a little bit more mature, professional, etc. Binary, it's, it has its own feel. It's a quick in and out. You're attracting different people, people that maybe are into, online gaming, etc. They'll be more apt to move over into binary, and then maybe the natural transition from binary into forex, and then hopefully forex into vanilla options. But there are multiple products, and we definitely see a lot of binaries opening. A lot of them unregulated, actually, completely. So the fact that Cyprus is accepting binary, it's not necessarily a good or bad thing. It's something that will mature and that they will become more, let's say, organized with how they manage that regulation. But I think long term, it's definitely something that shows that the industry, again, if we're not at a peak with FX, we have a new product to push forward.
But it's definitely going to be in Cyprus, the hub of binary options. We're not seeing anywhere else that's.
There's a lot in Malta, but I mean, still Cyprus is the focal point, I would say.
Okay. So I think we'll open up for questions right now. Please raise your hand, and you'll receive a mic. Please present yourself and then the question.
Hello, my name is Chrysis, I'm an IB, and I have two different and separate questions to your reputable panelists. The first question is whether they are facing any difficulties, let's say geographically, in terms of latency, since Cyprus is geographically located far away from the financial centers of London and New York. And the second question is about binary options, whether they feel that they should be licensed under a separate financial authority, let's say a gaming authority of CISEC. Thank you.
Thank you for your questions. I'll answer the first question on the latency. I mean, obviously, yes, the two major financial centers are New York and London. You also have Tokyo, but Tokyo is a separate story. And if the company's servers are not in London, then you see a latency. According to my experience, we're talking about 50 milliseconds and above. 50 milliseconds is the best case scenario. So yes, that is an issue, but it depends on the broker. We as FX Pro, we have our servers in London, right next to the service of the banks. So there's zero latency.
Latency depends a lot on where your endpoint is. Vasily is correct on that. If a trader is sitting somewhere in Europe or in Asia, then if the servers are based in New York, where many are, my firm's servers are based there, then getting that trade over to New York for execution is going to take an extra 50, maybe 60 milliseconds for sure. That being said, most firms have data centers and kind of proxy servers that are out there as well. And finally, when it comes to execution and latency, the vast, vast majority of that is going to be truly your endpoint. If you're sitting on a beach in Thailand with a mobile phone, right, you have a much longer time span to get your order sent via the mobile network, into the local network, over the undersea pipes, back into wherever that data center may be, whether New York or London, right? And so certainly to combat that, some traders are taking VPNs and lighting up, cross-connected VPNs. But latency is certainly an issue, though, again, I would dare say the vast majority of any latency does not come whether you are in London or New York, but more how you are accessing your client terminals. And then you had another question about binary options. Unfortunately, it's not something I can really speak of with any value.
Just to add, that's a very good point about the VPN. The client has the option, if a broker provides a VPN service, to trade from his or her VPN account, and that reduces latency further to 0. So it's a good idea to trade from a VPN.
But as Vasily said, and again, I have a technology background here, the banks generally have their pricing engines both in London and in New York, right? So no matter if your broker has their trading servers in New York or London, whether cross-connected or in the same data center, you know, again, that just, it's potentially going to add that 50 to 60 milliseconds of execution time if you are somewhere east of London and you have to cross the ocean to get to the New York execution, or whether you're versus being in London. But in general, that's where the bank pricing engines are. So if your broker doesn't have their actual execution servers there in London or New York, odds are you're facing an additional link from when your trade gets to their server, maybe it's in Munich, maybe it's in Moscow, right, to get then to the bank's pricing engines, which primarily are London or New York.
About the binary options.
Anyone want to take the binaries?
Okay, so I'm gonna take this. What we're seeing right now in the UK, for example, just last month, the Treasury office announced that they're looking into transferring the regulation of binary options from gambling to financial, to be under the FCA, mainly because of the experience that the FCA has with regulating Forex. So I think the move in the world is toward looking at it as a financial instrument and not a trading, doesn't require a trading license. But there will definitely stay jurisdictions where the regulator themselves are more known for their gambling licenses, like the Isle of Man, and places like that. They'll regulate it as a gambling product. But with standardization in Europe, probably after the FCA will transfer it to financial regulations, everything would follow, and that's the way it's going to stay in Europe. But we'll have to see.
Can I actually change up a little bit? Can I ask of the audience out there, how many work for a firm that is CySEC regulated? Raise your hands.
Thank you for your valued comments this morning. My name is Michael Elinas. I'm the general manager of Nord NFX Capital CY. It's part of the NordFX group that's recently been regulated here. I wanted to ask about the quality of service and whether that is an area that you're focusing. Essentially, we have a service industry, and just to have your perspective from the provider to the broker to the client, whether the quality of service is something that you're focusing on. I believe Mr. Glenn Stevens was asked a couple of years ago whether he would invest in a company here, and he said, well, the level of service is lacking. What is your perspective on that? Thank you.
I'll grab that first, if I may. Certainly the knowledge base of everyone who works in this industry here is high. And so the factual knowledge base is not a problem, I don't think. It really comes down to a company's culture, whether they decide as a company, do we want to be, is that part of our differentiation, that part of our marketing plan, that we will offer a high level of service, or are we going to be more automated and just put less focus on that? But certainly here in Cyprus, from what I've seen, there are certainly the capabilities to be very client service focused and to have strong customer service as a differentiator.
I think as a vendor, from a vendor perspective, we think there's opportunities for increased service. I think that the market's maturing here. I think it's a lot to do with what the panel were talking about regarding how we're coming out of the recession, how the view of Cyprus as a sort of a more significant player after the austerity moves. And what we've seen from an Abide perspective is that we've wanted to come and we try and offer offer, we tend to be more expensive, we tend to offer higher services, but it seems to be being accepted by the market. So from a vendor perspective, I think there's a shift into a more high service, high value culture.
And I think it's very important when you're looking at it from a marketing perspective that whichever choice you choose, if you're customer centric or if you are automated, whatever you promise to the client, you have to be 100% sure that that's what you're delivering at the end of the day, because that will destroy your brand. If you're saying that, we have people that are going to contact you X hours of the day, we have you have your own personal dealer, whatever promise it is that you're making to them, you have to make sure that you follow it through to the end, because that's when these kind of negative impacts will be felt later on the company as a whole.
Which goes back to the fact that it's a culture. It's a decision. It's not ad hoc, and maybe sometimes there's good client service available during certain hours, and maybe there's not. It has to be a decision that we either will focus on customer service or we choose not to.
I'd like to just add to that, yes, customer service is very important. The customer needs to know if he's talking to a person or to a machine. That's a very important factor, first of all. Second of all, you need to differentiate the customer service. Is it sales or is it support? So if you focus the company on sales, one thing. Support, it's another. So it's either reactive or proactive. And what actually we focus on is technology. So of course we have excellent customer support, as I guess everyone does. That's one thing. But the second thing, if the servers are down every 5 minutes, okay, you have the support to answer the calls. But will the client be happy? I don't think so. So I think the technology should be the priority of the brokers. And technology in terms of execution, server uptime, website uptime, and etc.
I agree that really what a brokerage is, we're just credit intermediaries, right? If any of our underlying clients could get a direct line with Goldman Sachs or Morgan Stanley, they would, but they can't. So they go through all of us, the brokers out here, as credit intermediaries. Right? So that's the core of what we do, and the technology that we use, the technology stack, has to work well. Otherwise, you spend too much time and effort on the customer service, right? But again, if and when it gets to the point that a customer is going to call you and does have a question, you've got to make sure that, I shouldn't say you have to make sure, you have to make a decision as a company how we're going to handle those situations.
Hello, thanks for the discussion. My name is Mikhail Barsakov, product manager at Exness Broker. If you are talking about another jurisdictions, what do you think about new Israel regulation? And if you are based on advantages, pretty the same location, Forex community, a lot of service providers, and it's linked also to USA, how Cyprus is linked to European Union. So what do you think about it? Thanks.
I just have only one opinion. I know that in Israel there's a lot of server providers and it's a very big community there. But unfortunately what Israel lacks is the MiFID. It's not part of the MiFID, hence you cannot really be cross-border your licenses across the European Union, which is a major drawback in my point of view. Thank you.
I'd agree with that.
Well, I'll answer a bit. What we see, I sit in Israel, in Ramat Gan, next to a lot of technology providers. What we see, everybody has to go to Cyprus because of MiFID, because they want to be regulated in Europe and be respected. Right now, Israel is just starting to enforce regulations, but again, those will be only internal regulations, meaning for Israeli traders. So it won't affect technology companies, and it certainly won't allow them to market themselves based on a local license, because that local license won't apply to outside traders. So everybody has to come to Cyprus in order to to access the wider world. So that's the situation in Israel. Even that we have a lot of technology providers, it's not as connected as Cyprus.
I just want to add one point. You mentioned that close ties of Israel with the US, but still, even if you're in Israel, you cannot accept US clients. You have to be in the US to be accept US clients, so it doesn't make any sense.
We're just just on the U.S. Question, right now every broker that want to be regulated in Israel would have to sign up with the IRS to prove they don't have any American clients. So that connection to the U.S. is not necessarily a enabling factor. It drags you down to a lot of regulations and not necessarily allows you to attract customers.
As a resident of the U.S., calling the IRS there is never a pleasant activity.
Okay. So I'm going to thank Avi for the moderation of the panel and for the panelists for their interesting comments. I hope you enjoyed.